In this video, I'll show you how the summary works in Tykr. So I'll give you a little background first. Well, when I was creating Tykr, I was trying to figure out a really easy to understand rating system because prior to using Tykr, there are other platforms I was trying to use and really coming to a conclusion to know if a stock is a good stock or a bad stock was really, really difficult. So I'm like, all right, what is an easy to understand rating system? And I was like, you know what? The traffic light. It doesn't matter where you're located or what language you speak. Everybody kind of gets the whole green, yellow, red rating system. So I thought, you know what? Let's do something similar. So I decided let's make stocks on sale, watch, or overpriced. And that language was used a little bit by Warren Buffett, Charlie Munger, and another guy by the name of Phil Town. I thought, let's use that language, but then let's create color coordination around it. So stocks, again, are either on sale, watch, or overpriced, green, gray, or red. And that just really makes it easy to understand if a stock is a strong stock or a weak stock. All right, let's take a look at one of my watch lists. This will give you a nice overview of the summary. So checking out this column here, as you scroll down, you can see the names and their summaries as of today. And you can see that most stocks do not reach on sale. In fact, only about 15% of stocks in the stock market make it on sale. It's pretty hard to achieve. All right, so you can see here a lot of watch, few overpriced, a lot of watch. But let's go ahead and click on one of these on sale stocks. I'm actually going to click on Duolingo in this case. And I'll show you how this works. Now, if you are curious, you can go to tykr.com and go to education and then down to calculations. You can actually see the calculations that power Tykr. They are open source for personal use. We don't want to hide anything from anybody, just creates transparency in our business. So circling back to Tykr, I'll show you how this works. To get to on sale, you need to achieve two criteria. Number one is you need a score in the hexagon here. You need a score equal or greater than 50. That's the overall financial strength of a stock. And then you also need a margin of safety of 50% or higher. That's the upside potential of stock, or how much potential money you can make. You want a nice high margin of safety. In this case, you can see Duolingo's at 316, but that fair value is 1,400, and that is 78% margin of safety. Think of it this way: with margin of safety, that's essentially, let's say you see a gallon of milk advertised for $5. Well, if you cut it in half, it's at $2.50. There you go. You got a 50% margin of safety. So anyway, you need those two criteria to achieve on sale. If only one of the criteria is at 50 or higher, then it's watch. And of course, if both are below 50, then it's overpriced. And that is where most stocks fall in the market. In other words, most stocks are overpriced. So if you're looking for a few ideas to invest in, a good place to start is the summary and look for those on sale stocks.